Hey there traders, welcome back. This is going to be my analysis on index futures for the week of October 4th. So we're in a new month, so I will be doing a top-down analysis on the monthly chart down to the daily. But first, I want to start on the 1-hour chart, reviewing my analysis from last week. So this is the 1-hour chart for S&P, and admittedly Monday and Tuesday were both pretty ugly, very choppy, but we did get a rally above to sweep the buy side liquidity, and then we had a drop down to this fair value gap. Remember last week which fair value gap I told you to keep an eye on? I'm not really seeing any inefficiency except for this 1-hour fair value gap, so you could try to pay attention to this going into early next week. And then after that, we had a rally up to, remember what my target was from last week? So equal highs, there's going to be a lot of buy side liquidity above here. So I'm really looking for this to be the target. So price delivered pretty perfectly, even though early in the week, it was pretty messy. And here's the 1-hour chart for Nasdaq. Monday and Tuesday was pretty messy as well, but you can see that on Wednesday, we dropped down into this fair value gap and had a perfect delivery for the target as I showed you last week. Equal highs, just like ES, there's a large pool of buy side liquidity. This is definitely a big target for smart money, so I'm definitely going to be looking for price to go up here. The only thing I see is this 1-hour fair value gap, so you can keep your eye on this going into next week, and this may give you an opportunity to get long for new all-time highs. But remember, this is not financial advice. This is just my opinion, my analysis. So on occasion, I remind you that I'm not a licensed financial advisor and that my videos are not for financial advice. They're purely my own opinion and my own analysis. So when I show you this, I'm not trying to convince you to follow my analysis or use my analysis in any way to make a trade. I'm just trying to highlight that if you did not listen to me and you actually used my analysis to make a trade last week, taking a long from this fair value gap up to the target, that would have been 400 points in Nasdaq. So that would have been $8,000 per mini contract. But again, this is not financial advice. I'm not trying to convince you to follow my analysis whatsoever. Okay, so that was last week. What am I looking for going into this week? Well, if you look at the price here, we did create new all-time highs, but it's not like an obvious target like we had last week. You can see last week we had a consolidation here for both Nasdaq and ES. It was an obvious target with a buildup of buy-side liquidity above it. We've taken the buy-side liquidity here, but you can see these new all-time highs, they're not like a long consolidation like how it was back here. So even though there may be liquidity a bit above here, it's not quite so obvious, and every time we made a new all-time high, we did drop down pretty significantly. So it's going to be hard for me to go long. Even though we are at all-time highs, we should have a bullish bias. I'm just saying that I don't really see any obvious targets to the upside. So because I don't really have an obvious target, I'm more inclined to just kind of sit out and just kind of wait until price show me something obvious to aim for. Okay, so real quickly here, I'm taking a look at the dollar index on the daily chart. You can see I was looking for price to come up for the buy side liquidity up here, but I'm actually going to go ahead and move this. Now that we've created relative equal highs here and here, I'm going to use this as the low hanging fruit. So I'm still bullish, by the way, on dollar index. You can see we had a rally up here, and then this weekly fair value gap in red, we did come down on the daily candle, but look at the bodies of these daily candles. It is completely respecting this weekly fair value gap. So if it continues to respect it, I'll expect a rally in the dollar index to go up for these equal highs. It could go higher. I mean, I'm still convinced that it can take out this high, but remember, I just want to aim for the low hanging fruit, which is going to be these equal highs. So if I expect the dollar index to go up, typically what that means for the index markets is that they will have an inverse relationship with the dollar index, so they will tend to go down. I'm not saying that's guaranteed to happen, it's just a tendency. So with that in mind, let's take a look at S&P on the monthly chart. So we have this balanced price range here in purple. Price did leave a monthly fair value gap here. I can kind of look at it as a breakaway gap. It's below this balanced price range, so it's going to take a lot for us to go down through it. Remember, this is not a fair value gap. This is going to be the October candle is currently forming, so we will have to wait until the end of the month to see whether or not we get another fair value gap. but we could have it to return back into this balanced price range. But remember, we are at all-time highs, so we just want to remain a bullish bias. Now, looking at the weekly chart, we could still come back down for this weekly fair value gap. If we don't, we can keep an eye on this lower wick, 50% of this lower wick. That is what I will keep my eye on as well. Other than that, there's really nothing obvious here on the weekly. Remember, we want to remain a bullish bias, so we could just hit this and then go up higher. But I don't really get too much information here on the weekly. I'm not saying that we're going to go down. Definitely not. I think we have to go down a little bit deeper onto the daily chart. Okay, so on the daily chart, if I'm looking at discount arrays, we've already tapped into this daily fair value gap not once, but twice, as well as going into this daily wick. We went down to 75% of it. So I kind of feel like we've done a lot of work already down here. So the key levels that I want to be keeping an eye on going into this week, of course, is going to be 50% on the weekly lower wick. But even above that, I want to keep an eye on this daily wick as well. Just going to go ahead and move this over here. I want to keep an eye on 50% of the wick. You don't need to worry about 75%. You could put it there and also put a 25%, but mainly I want to keep an eye on the 50% of this daily lower wick. We also have a volume imbalance here. You can see there's a gap between the two bodies on the daily candle. So I want to keep an eye on this as well. So these are going to be my key levels on the downside. Ideally, we don't take out this low. We just come down for maybe 50% of this wick before bouncing back up for new all-time highs. But of course, I don't really have a upside target, so it's really going to be hard to try and go long into this week. I'm more inclined to just pretty much just sit out and wait for price to give me something more obvious. Now, keeping the dollar index in mind, if we are going to be going down a little bit further, I think going down below this swing low is going to be my signal to perhaps potentially go for shorts, going for downside targets. And where would I be aiming for? Well, this is going to be the weekly fair value gap. This is what I'll be aiming for if we take out this swing low. Especially if we go down below, you can see these down candles here. This is going to be an order block. If we go down and violate this daily order block, that's going to give me stronger conviction to aim for this swing low and this swing low going into this weekly fair value gap. But remember, at all-time highs, you do not want to be bearish until you get a clear signal. And for me, it's going to be taking out this swing low. All right, moving on to Nasdaq. This is the monthly chart. I'm looking at the monthly fair value gap here. Other than that, I'm not seeing any other inefficiencies. So we'll get to go down to the weekly chart. And we do get a little bit more detail here on the weekly chart. You can see that monthly fair value gap. I like it because we have these relative equal lows here. So a buildup of sell side liquidity is within this monthly fair value gap. But it does have to punch through this balanced price range. And remember, we do not want to be bearish at all-time highs. So if we're looking for a full-blown reversal, yeah, we can aim for this. But if it's just going to be a little bit of a retracement, then I think it's more likely that we look for this weekly fair value gap or even this weekly fair value gap above it. Again, I do want to keep an eye on 50% of this lower wick on the weekly candle because this is a pretty long wick. Okay, so here on the daily chart, you can see that Friday we did trade down into this daily fair value gap. Definitely want to keep an eye on this fair value gap going into this week and seeing how price behave around it. If we do start going down below this fair value gap, we do have this daily wick. I want to keep an eye on 50% of this wick. And just like I said with ES, you can also look at 25% and 75% of this wick as well. Should we violate this swing low, we will also be violating a daily order block. So I will expect us to go down for lower targets. We'll be aiming for this weekly fair value gap below the swing low. And then if we go a little bit further, we can aim for this swing low and this second weekly fair value gap. So this week is kind of hard to predict. I don't have strong convictions in either direction. I want to be bullish since we're at all-time highs, but I don't have any clear upside targets to aim for. At the same time, I don't want to be bearish either because we're at all-time highs and I don't have any signals telling me that we are going to be reversing. So at the moment, I'm not really sure. I think going into this week, if you're going to take a vacation, this week will be a nice week to just sit on the sidelines, take a vacation, and just observe what price is going to do. So hopefully I'll have more information going into next week's outlook. But until then, guys, please give this video a like and subscribe if you got something out of it. And until I see you next time, safe trading.